I think it's mostly US dollars that central banks want to get off their books and replace with gold. And but I think eventually investors, both in retail and institutional, are going to figure out what's going on, and they're going to want to do the same thing. They're going to I
want
think central bank demand is going to continue to grow. And so the price, I think, has really no place to go but up. It's well, it seems to me like a lot of the trading recently is kind of news driven headlines, not so much the fundamentals. And so I think the newer headlines are, oh, maybe we're going to get some kind of trade deals. Maybe the trade war is going to be ending soon, or the tariffs won't be as high. Plus, you've got some good earnings now that came out today from Microsoft, from Meta. So you're getting a big rally in the tech stocks. And over recent months, there's been a pretty strong negative correlation between gold and those tech stocks. It's more of a risk on, risk off trade. And since everybody is now buying back the risk assets, many people are selling the risk off assets that they bought, which was pretty much gold. It was the only risk off asset that was kind of left standing. Everything else was going down, including treasuries. So I think you're getting some profit taking based on those headlines. But, I think the fundamental story for gold has never been better. I think the momentum is there. I mean, no bull market goes in one direction without any corrections. I think the economic news, including the economic news we got today, was very weak. And I think the US economy is in recession. It's been there for a while. But I think the labor market is going to roll over and the economy is going to continue to weaken. And ultimately, we're going to get rate cuts. We're going to get a return to QE, I think. And all that is very bullish for gold. Well, rates are too low. I mean, that's one of the reasons gold is as high as it is. It's because inflation is going to, keep growing. The Fed never raised rates high enough to put out the fire. We're in accommodative territory now. I mean, the Fed claims that its monetary policy is restrictive, but credit growth continued and accelerated during the entire time that the Fed claimed it had its foot on the brake, which obviously it didn't do because governments kept going deeper into debt, households were going deeper into debt. They never stopped the credit expansion, which is the inflation. It's not just a money supply that's inflation; it's the supply of credit. And the Fed has been an engine for easy credit, and that's helped push up prices, and that's going to continue. And so the gold market sniffs that out. The gold market realizes that the interest rates are negative in real terms because the Fed is, the rates are not high enough to compensate for the rate of inflation. And so that's one of the reasons that central banks are holding gold more than treasuries. And I think that trend is going to continue as the de-dollarization efforts pick up steam as we move forward during the year. I mean, the growth's going to be weak. In fact, we're going to be in a recession. I mean, we've already started it because the U.S. economy, it's a big bubble, but it's based on consumer spending, which is fueled by debt and trade deficits. So, in order for consumers to spend, they have to have access to credit and access to goods produced in China and other countries. Well, we've basically cut off that supply chain. The goods are not going to be coming in to the country, and so if the goods aren't here, we can't buy them. And so all that economic activity that is related to that, trucking, with transportation, the people that work in retail, you know, there's going to be a massive recession in the consumer spending part of the economy, which is like 70% of our GDP. So this could actually be a bigger supply chain disruption than COVID. We'll see. Um, but the goods that Americans buy are just not going to be on the shelves, so that they can't buy them. And if they can't buy them, then we can't sell them, right? So a lot of jobs are going to disappear, and that's going to be showing up in the numbers, and we're going to be in a recession. I have no idea if they have a game plan. I mean, they may just be winging it. They just react to the headlines, because there's no real path to victory here. We've launched a trade war that we can't win. So the only question is, how do we find a graceful way out? How do we, contrive some kind of fake victory from the jaws of defeat? I don't know, and I don't even know if they realize that we can't win the trade war. Right? I have no clue. I mean, there's a lot of nonsense that comes out of the Trump administration because a lot of the guys that are really pushing Trump towards this trade war and protectionism, they're the same guys that are pushing Bitcoin. So, I don't know if they're pushing this because they know it's going to hurt the economy and hurt the dollar, and they think somehow that's going to benefit their Bitcoin. I don't know. But maybe they're just, foolish and they actually believe it's going to work the way they believe Bitcoin is going to work. Well, first of all, I mean, trade is on balance pretty free globally. I mean, it's not purely free. Most countries have some tariffs. Usually it's on certain goods where there is a politically organized faction within the country that has been able to basically bribe the government into implementing those tariffs so that they can benefit at the expense of the rest of the country that isn't politically organized to fight the tariffs. But a lot of that has to do with agriculture, farming, and a few other goods. But by and large, like one of the countries that they're talking about that we're close to a deal with is South Korea. Oh, okay. Well, what can we get out of South Korea? Because if you look at what their tariffs are, the average tariff rate on U.S. goods coming into South Korea is 0.75%. That's the average, right? Some tariffs are a little higher and some are zero. But in total, I mean, they're less than 1% tariff. So even if they drop all their tariffs, is that really going to make a difference to our trade relationship with South Korea? And by the way, last year, before Trump jacked the tariffs up, our tariffs on goods coming in from South Korea averaged 3.3%. So we were tariffing South Korean goods 4 times as much as they were tariffing our goods. So, I mean, if we have a deal, are we both going to go to zero? I mean, wouldn't that be a win for them? Because we'd be lowering our rates a lot more than they'd be lowering theirs. So I don't even know, like, what are we going to gain from South Korea? And most of the countries that they're talking about a deal with have very low tariffs to begin with. So this is all a bunch of smoke and mirrors. I mean, I think the biggest driver for gold really has been central banks understanding that the dollar's days as the reserve currency are numbered. I mean, nobody knows exactly how large that number is, but they know that it's getting smaller every day. And central banks need to replace dollars with another monetary reserve. And the best choice is gold. And that's what's happening. You're seeing central banks accumulating more gold. They still own a very small percentage of total reserves in gold. And so they have a lot of currency reserves to divest, predominantly US dollars. I think it's mostly US dollars that central banks want to get off their books and replace with gold. But I think eventually investors, both in retail and institutional, are going to figure out what's going on, and they're going to want to do the same thing. They're going to want to replace some of the bonds or fixed income that they have in their portfolio and put gold there instead. And so I think the investment demand is going to grow dramatically over time for gold. And I think central bank demand is going to continue to grow. And so the price, I think, has really no place to go but up. Doesn't mean it can't, go down along an upward trajectory. Like, we pulled back. We almost got to 3,500 a week and a half ago, and now we're almost down to 3,200. But I mean, if you look at where we were a year ago, today we were, maybe 2,200. So we've moved up, $1,000. So gold is clearly moving up, and it's not just because of the trade war. I mean, it was moving up before the trade war. We could back the dollar by gold, but we'd have to raise the price of gold, the official price of gold, quite a bit in order to do that. But then, in order to maintain that backing, we'd have to stop all the deficit spending, which Trump doesn't want to do. I mean, Trump is one of the main reasons that Congress is going to pass this big, beautiful bill, which is actually quite ugly, and it's going to contain massive increases in deficit spending and a $5 trillion increase in the debt ceiling. We couldn't do that if the dollar was backed by gold, which is why it's not backed by gold, because politicians don't want to be disciplined. Uh, they were disciplined when we had gold backing, which is why our economy was much better under a gold standard than it is now. But now the government just can get away with murder. And so Trump could talk about it, but actions speak louder than words. He's not acting like somebody that wants to be on a gold standard. He's acting like a big spending liberal, or Democrat, Keynesian that's wants to prime the pump with inflation and government spending, and gold prevents that from happening. Yeah, if you look at the GDXJ, there's a lot of pretty big companies in there. I mean, for the gold space. I mean, it's not like, I mean, the gold companies are small in comparison to, your typical, let's say, US Fortune 500 company. Um, Even the seniors are pretty small market cap. But the juniors that we're overweighting in our portfolio are much smaller than the average GDXJ company. And and they've gotten even less love. But, the thing is with these stocks, you really need to accumulate your positions over time, because there's less liquidity there. And, if you go in a big way, you could be moving the price. So we have devoted, resources to accumulating these positions. And yeah, they haven't moved up nearly as much as the big stocks that we own. And we still participate in the gains from the bigger companies. But because we have this overrating in these very small country companies, it's caused our performance to lag. But we're willing to do that, make that sacrifice for the long-term gain. Because I think once we really start to see money coming into this sector, which hasn't even happened. In fact, retail investors are still pulling money out of the sector. I mean, they've been liquidating GDX and GDXJ every day this year, basically, even as the stocks were going up, the gold stocks. So, but when the investment flows reverse, when Wall Street wakes up to what the central bankers obviously already know, and we start to see a real re-rating of the gold sector, and a lot of money that has no allocation right into gold starts coming into gold, a percentage of that is going to want to go to these smaller stocks. And then they're really going to move. Those stocks are going to way outperform the bigger stocks, which is why we own them now. And so we're sacrificing short-term performance because we know if we're right on what's going to happen in the long run, we're going to have huge outperformance. And if we just waited for these stocks to really move to then try to buy them, well, we couldn't get anywhere near what we own. We have good positions that we would never be able to accumulate if we had to compete with everybody else trying to buy the same stocks. So we're just waiting, and then we expect to have big outperformance. And at some point, we'll probably lighten up on these stocks, and that's where some of the liquidity is going to come from. When everybody else wants to buy these stocks, well, we'll be able to sell some.